Check, check. Mic check. Mic check, mic check. Mic check, 1, 2. Mic check, 1, 2, 1, 2. What's up, everybody from Instagram, YouTube? So, guys, if you are on Instagram on this live and you want questions answered, head over to my YouTube. I'm going to be answering questions on there, YouTube Live. I can't do it on both. So if you guys want your questions answered, head over to YouTube Live. Here on YouTube, let's get some questions. What do you guys want to know about? Infinite banking, real estate, private money, funding deals. Just what do you guys want to know about? Ask me anything, and let's get some dialogue back and forth so I can serve you guys and give you as much value as humanly possible. So let me know what you guys want to know about. Got a few people here on YouTube. So guys, in the chat box, ask me questions. Let's get some dialogue going. And that way I can answer your guys' questions and give you value. So looks like Christian Angelo Diaz. What's up? How do you feel about IULs? So great question, Christian. So I have 2 indexed universal life insurance policies. That's what an IUL stands for those that you don't know. I have 2 of them. I hate them. I got them before I knew anything about life insurance, about infinite banking. And there's a couple of reasons why. Mainly it's the guarantees. Inside of an IUL, it's built off a universal life insurance chassis. And what that means is that it's not set in stone. There's no guaranteed fees, no guaranteed cost. The actual insurance portion renews every year. It's called annual renewable term. So every single year that you get older, you have to renew the term insurance. And the older you get, it gets exponentially more expensive. So your cost goes up every single year. The fees, they're not fixed. So the insurance company can step in and say, hey, we're going to jack these fees up. They can lower the crediting rate that you get. So there's just too many moving parts. And in your later years, when the costs are through the roof, and let's say there's a down year in the market, there's supposed to be a 0% floor, so you can't ever lose money. If there's a 0% floor and your costs and fees are through the roof, how do those get paid? From your cash value. So the reason I like whole life is you know what it's going to be. It's guaranteed to grow every single year without fail, because the fees and the costs never change, contractually guaranteed. So they never change, but your compound growth never stops. So I don't like IULs at all. I think they have their place as like maybe a retirement vehicle, but for infinite banking, they should never be used, ever. Anyone tells you otherwise, they're just trying to sell you on a product. King Cat, you said you can't hear. Can everyone hear me? If not, let me know. So everyone on Instagram, if you want your questions answered, go to YouTube. I have a YouTube live going on right now. I'm not going to answer questions from both. I'm just going to focus on YouTube. So if you're on Instagram live, head over to my YouTube live. Make sure you subscribe and hit the bell so you get notifications when I put out new videos. But let's see what we got here. So Matthew Quebec says, what's up, Devin? I have a call set up with one of your team members, Carson Herline, tomorrow. Excited to learn more about infinite banking. So Matthew, excited for you, man. Carson, he'll take great care of you. Come with all your questions, so he can answer them. And if you have any questions here that you want me to answer, let me know. But once you're actually approved for your policy, it takes a little bit of time, but you can really start implementing it and doing exactly what I do. There's no limit to what you can do with infinite banking. The only limit is really the one that you place on your mind. I think that's why I've done so well with infinite banking, because I get super creative and I just move money a lot. And if you use a policy as the baseline for when you're moving money, it just exponentially grows, because when you move money with a policy, your original dollars never move. They're just sitting there compounding and growing tax free. So you're literally multiplying money by using it in a policy, and how you use it will dictate how well it does. So I'm excited for you, man. What if you set up an IUL correctly? If you set up an IUL correctly, you'll have some cash value up front. That doesn't negate the fact that in the later years, if you look at an IUL contract, look at the guaranteed side. The guaranteed side goes to zero. That means you have zero cash value. That's the guaranteed part. Everything else is based on assumptions. It's based on, think about this. We're coming out of the longest and biggest bull market ever. And these policies that started back in, let's say like 08, 09, these IULs, they should be crushing it, right? Because we're in one of the biggest bull markets we've ever had. But they don't crush it because, again, the cost of insurance keeps going up. And with those policies, the insurance company can change anything anytime. An IUL is basically taking the risk away from the insurance company and putting it on you as the policyholder. That's ridiculous. Insurance should have no risk. A whole life insurance policy has zero risk. IULs have risk. So doesn't matter how they're structured, they're not great in my opinion. Again, anyone on Instagram, if you want your questions answered, I see that you guys have been putting some questions in here. Head over to my YouTube live and ask the questions there, and I will definitely get to them. So yeah, head over to YouTube live if you guys are on Instagram live right now. Let's get back to these questions. So, Mike says, do you explain this in detail in your program so someone who knows nothing can follow along? Mike, absolutely. So there's a link in my bio on Instagram, TikTok, here on YouTube, where you can actually watch an in-depth training video of mine, and it'll break everything down for you. And then if you want to learn more, you can schedule a call with someone on my team, and they can answer even more of your questions if you have them. So yeah, we definitely give step-by-step how this works. And the video, I would definitely check that out. It's Infinite Banking on my bio. Is this possible to do in Holland? Unfortunately, guys, with Infinite Banking, it's only available the way I do it in the United States because of the way life insurance works here in the United States. You can do it in Canada, but it's a little bit different. So if you're in Canada, reach out to Ascendant Financial and they can help you. Matthew says, I have a whole life policy currently through Guardian at the current moment. I was speaking with my agent about decreasing the death benefit, increasing the amount that goes into cash value. Nice. The only problem though, Matthew, is that with Guardian, they are a direct recognition company, which means when you take a policy loan, it's going to affect your dividends. You're not going to earn all the interest and the dividends on the full amount because you took a policy loan. So that's one reason I don't like Guardian for infinite banking. It'll work, but not as good as a non-direct company. Non-direct means when you take a policy loan, has zero effect on your dividends and your growth. So I would definitely do what you're saying. Just Guardian's not the best company. Can you talk about the premiums you have to pay each month with a whole life policy? So guys, the way the premiums work, you decide the premium. Okay. So you would basically tell me or my team, hey, I want to do $1,000 a month. I want to do $10,000 a year, $100,000 a year. And that's your premium. We build it to where you can put in that much money without being taxed. You don't have to put in that much money. That's the max that you can put in. So easy math. Let's say you've got a $10,000 a year premium. Within that premium is your base premium. The base is what you have to pay in order to keep the life insurance. So the base premium is usually anywhere from about 15 to 40% of the max premium. So if you're $10,000 a year, your base premium, let's say it's going to be anywhere from $1,500 to $4,000, depending on how you want that policy to perform in the short term and long term. So you dictate the amount. That's what I'm saying. It just has to be at least your age times 10 per month for it to work. All right. Everyone on Instagram, if you're asking questions, I will not be answering them because I'm not scrolling through. Head over to my YouTube live, which I'm on right now, and I will get your questions answered. All right. So what else do we got? Can we use infinite banking in Europe? So unfortunately, you cannot. Matthew again answered, how do you feel about Guardian versus their company? So I answered that for you with the non-direct. Great company. Guardian is a great company, just not the best company for infinite banking. Where do you go to get this account? So it's a policy. You have to really go to an agent that knows how to structure it for infinite banking. Most agents have zero idea how to do it because the commissions are so much lower. So there's not a lot of incentive for an agent to structure a policy like this, even if they know how to do it. Most agents just don't know how, because think about an insurance company. They're going to train their employees on how to make more money, not on how to make less money. If they train them how to make less money, the agent's just going to go somewhere else, right? So most agents have no idea how to structure these properly. If they do, they don't want to because they don't want to give up their commission. So you got to find an agent that knows how to do it and is willing. That's me and my team. So if you want to take advantage of something like this and learn how to do it, check out the infinite banking link in my bio, register for the free training video, and then you can jump on a call with someone on my team. Hi, Devin. What are your thoughts on rolling over a 401k to an annuity? Well, first thing, I think a 401k is the worst place you can put your money. Absolute worst. So putting it somewhere else is a start. I don't really like annuities. I really wouldn't do that. What I personally did is I had a 401k with an old employer, like 170 something thousand. I just took the money out. So I paid the penalty and I paid the taxes. I was left with around 125 grand. I took that 125 and I funded a policy, a life insurance policy for infinite banking. Immediately within the first week, I had access to $109,000. So I took that 109, the 125 is still compounding. Because with infinite banking, guys, you're not taking your money, you're borrowing against it. So your money is collateral. I get $109,000 from the insurance company, from their money. I take that 109 and I put it into a flip on a property. I think I made like 60 grand in 3 or 4 months by doing that flip. So think about it. Because I had control of the money and it wasn't in a 401k, I was able to make back the penalty and the taxes within a few months. And if it just sat in that 401k, I got no control until I'm 59 and a half. It's a long time. So what I would personally do, which is what I did, is take the money out and fund a whole life insurance policy structured for infinite banking, so you can start moving your money while the money you put in never stops compounding tax free. I had a question, or maybe a couple. This is Delhi. Let's say we do a loan. Does the repayment go as a payment for the premium? Great question. No, they're two totally different things. There's premium and then there's loan repayments. So basically, you never have to make a loan repayment because the loan you got is really just an advance of your future death benefit. So if you never pay it back, the insurance company just deducts it from your death benefit. So you don't have to pay it back. You should, but you never have to. So you're in total control. But the premium is something completely different. Premium dollars are over here, loan repayments here. Once you put in your loan repayments, it builds back up your cash value. As soon as you repay a loan, dollar for dollar that you put in, you can reuse it again on another policy loan. So hopefully that makes sense. Dang, lots of questions here. I appreciate you guys. Look at all these. Let's see. How much do you have to contribute to a policy? Let's say for 50K, what's the rate? John Rod, this question doesn't really make sense. I'm not really sure what you're asking. 50K, are you asking if that's the death benefit? These aren't structured for the death benefit. They're structured for the cash value. So all you do is you say, hey, Devin, I want to put in 1,000 a month, 10,000 a year, 20,000 a year. That's what we're structuring it for, not for the death benefit. The death benefit is the cherry on top. So not really sure how to answer your question there. The rate of growth for the year is guaranteed 3.25 bare minimum. So 3.25 is the guarantee, and then you get dividends on top of the guarantee, which is based on how profitable the insurance company is the year prior. And the companies I use have paid a dividend every single year for over 100 years. So the dividends aren't guaranteed, but they're pretty much a sure thing. Like if they've paid them for 100 plus years through the Great Depression, through World War I, World War II, meltdown of 08, the likelihood they're going to keep paying them is very, very high. Let's see. If I put 50K into my life insurance and I borrow, let's say 30, how much would my monthly payment, how much my monthly payment will rise for insurance? What it's included in this? I'm not, Yasiel, I have no idea what you're asking. It doesn't make any sense. I think what you're asking is what's the payment that you have to make back on the 30,000? And it's zero. You never have to make a payment. You should, but you never have to. You're in control. If you took that 30,000 and you paid off a car, what you should do, you don't have to, is you should take what you were paying on the car, let's say it's $500 a month, and take that and pay it back to your policy. Because now you're getting the interest that you used to pay to the bank on that car loan. So you're treating your money just like the banks. You don't have to do that though. You could just never pay it. But then you'd be saying that your money is not as valuable as the bank's money, which makes no sense. Your money should be more valuable in your eyes. So hopefully that answered your question. I really wasn't sure what you were asking there. It didn't make much sense. Michelle says, What is required to open one? I'm 38 years old. Do I need to get a health exam? Great question. So you have to go through a questionnaire, bunch of health questions. It's basically an application. And then you have to do a health exam. And then you have to basically just be very responsive, because if the insurance company needs something from you, the sooner you get it to our team, the faster we can get you approved for a policy. So yeah, that's it. Health exam, application, and be responsive with the team so we can get you approved. Ingrid said, I have a 401k question. All right, looks like that'll be later. Non-direct, got it. I'll talk to Carson about it. Matthew, so yeah, non-direct. Almost every company we write with is non-direct. So we write with Mass Mutual, Lafayette Life, One America, Security Mutual. We do write with Guardian, but they are a direct recognition. So that's kind of like the last resort, in my opinion. Most of my personal policies are with Lafayette Life and One America. How does having a ministry help this process? I have no idea. I don't have a ministry. So I don't know, Joseph. James, Jimmy, is that Jimmy? Jimmy Davison, that's one of my clients. Jimmy, I got a story for you, man. Remember when I was supposed to go to the courthouse and it was for one of my properties and I went like the wrong month? I was supposed to be there like July 7th and I went June 7th. So I went back on July 7th and they had dismissed the case, but never sent me anything in the mail letting me know. So I literally went twice all the way downtown Phoenix and back for nothing. Ridiculous. Hope you're doing well though, man. I know we're trying to get your policies through with Mass Mutual right now for the kiddos. But Jimmy said, are you rolling your Coastal States Bank cash value line of credit loan back to the insurance companies now that the interest rates at Coastal will increase over 5%? Great question. So because of the amount that I have in cash value, they give a lower interest rate. So as of right now, my interest rate with Coastal State Bank is 4.5%. So it's still lower than the 5% that the insurance company charges. And just so you guys know what I'm talking about, a cash value line of credit is, there's banks out there that'll take your policy and they'll take the cash value and hold that as collateral and give you a line of credit to use at the bank. And the reason it makes sense to do it is because it's a lower interest rate usually. So you're making a bigger spread on your money. And two, if you have a lot of policies, like I've got 9 of them, if I have a policy loan from this policy and a policy loan from this policy, another one from this policy, and that policy and this policy, it gets ridiculously hard to juggle making all the repayments. But if you bundle all of your policies into one with the cash value line of credit, now you just have one big line of credit and just one payment to make things back on policy loans. So it just simplifies things. But to answer your question, Jimmy, if they go above 5%, I'll probably go back to it. Because again, it is more convenient. So if it goes a little higher, I might stay with the line of credit. If it goes a lot higher, I'll definitely go back to using the insurance company directly. Thoughts on New York Life for whole life insurance? Great company for normal whole life. For infinite banking policies like I do, not good at all. Reason being is because of early liquidity. They don't like you taking policy loans immediately. I believe they are also a direct recognition company. So New York Life is not good for what I do. How long has the insurance company you are representing been around? What happens if it folds? Great question, Ingrid. So the companies I work with, Mass Mutual, 160 something years they've been in business. They're not going anywhere. They've been around through the Great Depression, World War I, World War II, you name it. They're not going anywhere. most stable company in the nation, one of the most. One America, been around for, I think, 135 years. Lafayette Life, been around for, I think it's 116. Those are the three main companies I write policies with. They're not going anywhere. If they made it through the Great Depression, if they made it through all the meltdowns and the highs and lows of any economy, they're not going anywhere. Reason being, there's only one pool of money, guys. You have to understand, there's one pool. Regardless of where the money's at, it's one pool of money. Just like there's only one source of water on the earth, right? It evaporates into the clouds, and eventually, where does it end up? Back in the ocean, right? Everything flows back through the ocean. There's only one pool of money in the world. And who has most of that money? Insurance companies. So to answer your question, they're not going anywhere. They're not folding. They've been in business for over 100 years, and they've been profitable every single year. So they're not going nowhere. Can someone, where was that? Geez, tons of questions. Can someone in Holland use someone in the US? You can't live out of the country and do infinite banking. Do you think I should get a real estate license to start doing real estate myself, like owning rental properties? Tommy, it wouldn't hurt. You don't have to do it though. I don't have a real estate license, but it helps because you can represent yourself and get the 3% commission. So just for that alone, any house you personally buy, if you don't have to give up 3% commission to the agent, I think it's worth it, but you don't have to do it to be an investor. How long is the time frame for the policy to be set up? G. Walia. It takes about 6 to 8 weeks to get approved. And then once it's approved, it takes about a week or so to get issued. So let's call it 2 months is what it takes to get everything going. Also, what interest you borrow at and what is the dividend you get on the policy. So the interest that you borrow at is 5% simple interest. So every time you make a payment on the loan balance, it goes down, so you pay less interest. The rate that you earn on is compound interest. So it's always going to keep getting bigger. You're going to keep earning more interest. It's guaranteed 3.25% plus dividends. Dividends are generally the last 10 years or so are around 2 to 3%. And it's all tax-free as long as it's structured properly. How long do you have to have a policy before you can pull out / advance? What is the risk of pulling out this advance? So Ingrid, if a policy is structured correctly, you can access money within the first 30 days. Has to be structured though correctly. And there's no penalty for doing it. If you withdraw the money, then anything you withdraw above and beyond your cost basis, so basically what you've put in. So if you start withdrawing gains, you got to pay taxes on that. Just never withdraw it. Just take a policy loan. There's no taxation on policy loans. So yeah, within 30 days, if structured properly, and there's no penalty, never withdraw it, because then you also interrupt the compound interest. Just take a policy loan, and then you never interrupt the compound growth. Frank Meza, is IUL better than a whole life policy? Absolutely not. I was just watching a company called MPI with Curtis Ray. Curtis Ray bashes whole life because it threatens MPI. MPI is, I hate to say this, but it is going to implode. MPI, there's so many things wrong with it. I don't want to bash anybody because at the end of the day, that's not what I like doing. I just know for a fact MPI is going to be out the door. It's something he created using an IUL. All you're doing is you're taking your cash value from an IUL and you're taking that money to buy more insurance. And what that's genius for Curtis Ray, because the more insurance you buy, the more money he makes. But the thing is, you're borrowing to put in more insurance, thinking you're going to make a positive arbitrage, a positive spread. There's no guarantee on that. So those will implode, guys. MPI will implode. I can assure you that. I almost want you guys to clip this, record it, and when it happens, send it to me. Oh, gosh. MPI, run for the hills. That's all I can say. Can you talk about, this is Kyle Cox, can you talk about maxing out your policy before taxes kick in? Yes, so that's called a MEC, Modified Endowment Contract. So basically, guys, what you do with infinite banking is you just overfund a death benefit. That's really all you're doing. So you've got a base premium. Let's call the base premium $3,000 a year. And then you overfund that base premium by, let's say, $7,000 a year. If you do that, you have to be careful because there's a line in the sand where if you go over the overfunding, it becomes a modified endowment contract, which turns it into a taxable thing. It basically acts like a 401k at that point. You don't want that. So what our company does is we build the policy to basically hug up against the MEC line without going over. As long as it doesn't go over that MEC line, you'll never be taxed. But you dictate the MEC line. You would just say, hey, I think I can do 10,000 a year. I think I can do 100,000 a year. I think I can do 5,000 a year. And we build it to where that's the MEC line. And then everything below that is optional. And then you have your base premium. So your base premium is what you have to pay to keep the policy active. Everything above and beyond that to the MEC line is optional. You should put it in every single year so you get the most growth, but you don't have to. Just never go over that line in the sand that you drew. 5 grand, 10 grand, 15 grand a year, whatever it is, you just let us know how much you can do. We'll build it so where that amount, anything that amount and below will never be taxed. So hopefully that answers your question, Kyle. Deli, in your opinion, is 10K base premium with PUA of 20K a good policy, or are there better policies? So that would be so $30,000 a year total with $10,000 in base. So that's basically 33% base and 67%, let's call it, paid up additions. That's a very good policy depending on what you're looking to do. So the lower the base premium, the slower the policy is going to grow in the long run. The higher the base premium, the more it's going to grow in the long run. So if you're looking for like a retirement vehicle, if you're looking for a huge amount of growth when you're in your golden years or whatever, you want more base premium, less paid up additions. So it just depends on what you're looking to do. But I think it's a pretty good policy, 33% to base. For the death benefit, do you carry a separate policy for just that or another one for infinite banking? No, the death benefit is infinite banking, guys, is just a concept. It's not a product. Life insurance policy, a whole life insurance policy is the product. Infinite banking is just what you do with the product. So you get a death benefit with every single policy. It's not separate. The reason why you have higher cash value in policies because you already contribute that much. David, that's not really. No. The amount that you put in is the amount you can put in. The percentage of the amount you put in, that's the same regardless if you're putting $1 million a year or $10,000 a year. The first year in a policy, you have access to 60 to 90% of what you put in, depending on what you want the policy to do. So let's say you have access to 60% of 10 grand. That's $6,000. If you put in $1 million and you got access to 60%, that's 600,000 bucks. Yes, it's more money, but the percentages are the same. The only thing that holds you back is how much you can put in. That's all. I just bought 2 multifamilies. Lillian Gonzalez, congratulations. How long do you have to wait to pull equity and keep investing? From a multifamily, it's been a while since I've been in mortgages. So you guys know, before I got into real estate and infinite banking, I used to be a loan officer. I left in October of 2019. So it's been almost 3 years. So I'm not quite sure, but I think you're going to have to wait at least 6 months. So there's seasoning guidelines, basically. So if you close on a property today, you can't pull money out tomorrow unless you bought the property cash. So if you've got no loan on the property, you just bought it cash, I believe, unless they've changed the rules, I don't know because it's been 3 years, then you can take money out immediately, but I don't know for sure. So I apologize, Lillian, for not giving you an exact answer. What is the benefit of having multiple policies instead of adding more money to one? Fabio, great question. The benefit is not being taxed. See, if you start a policy for $10,000 a year, that's all you can put in it per year of premium. If you put in more, it becomes taxable. So the reason you have multiple policies is the first one, you get to 10,000 bucks, but then you've got, let's say, 20,000 just sitting in your bank. You start another policy with 20 grand so that this 10 is not taxed, this 20 is not taxed. And then you just keep getting more as you have more money coming in. So you just can't put more into the one policy. As of 1988, the IRS stepped in and they didn't allow it because wealthy people were just dumping millions of dollars in these policies and avoiding all taxes. So where'd all the questions go? Kevin Kelly says, give up pop for a couple months. Where did that come from? Do my eyes look red or something, guys? Do I look like I'm high? Maybe Kelly wasn't talking to me. If I buy a $90,000 truck with infinite banking, what level of policy would I want to set up? How would you recommend buying it so that you also get tax benefits on the LLC side? So the way I would probably do it is I would take the 90,000 bucks once you pull a policy loan. I would lend it to the LLC as working capital. And then I would create a note between myself and the LLC. So now the LLC pays me back interest only. So I'll make math easy. Let's say it's 100 grand instead of 90. It's $100,000 at, say, 10% interest. Well, let's use 12%. That's an easier number. That would be $12,000 of interest per year. So the LLC would pay me back $1,000 a month. I would take that $1,000 and just repay the policy loan. So I'd be getting more money into the policy to grow tax-free. The $1,000 a month would come off my taxable income. Then I would take the 100,000, or in your case, the 90,000, and I would buy the car cash from the business. Okay. So now I'm imagining a truck, it's probably over 6,000 pounds. You can then write off that entire amount for the truck, on top of you writing off the note between you and the business. So hopefully that made sense. That's like a high level way to use policies, but you're getting $12,000 a year off of your taxable income. That 12,000 bucks is going back into your policy, just repaying a policy loan. So you get more money in there. You can reuse it again. You buy the car from the LLC or the truck. If it's over 6,000 pounds, you can deduct the entire amount. So you're getting a ton of benefits. And then what I would do is I would take whatever the truck payment would have been, and I would just pay that as well back to my policy. So you're just getting so much more money flowing back through your policy that you can just reuse again and again and again and again. The more you reuse it, the more profitable your policy becomes. So hopefully that answered that. Got a call with the Money Multiplier Thursday. Pumped to get started. Michelle, that's amazing. Who do you have a call with? Is it Carson, Joe, Steven, Gabby? Let me know. Jimmy, 2 courthouse trips, but very productive. I remember the phone call on your way home feeling like you had an old man moment. Yep. My coastal rate is 4.75, so I guess my smaller available LLCs. Yeah, so just the higher you get up on your cash value, they start giving you lower interest. I think the next, when you get to the 4.5, I think that was when I got to like 600,000 in cash value, something like that. So the next one is $1 million. Once you get to $1 million in cash value, the rate goes down again. So you just got to get more money in there, Jimmy. If setting up these policies make your agent less money, are they incentivized in other ways? I'm interested in being an affiliate of some kind. Ingrid, the agents make less money, so there's no real incentive aside from just helping people. Like when I started doing this, I was just a client. I got a policy and I started using it for real estate, and I started seeing, holy cow, this is incredible. I just started telling people about it. The more people I told, the more people wanted to learn more. They wanted to do it themselves. So I was just sending people over to the person I started my policy with, and it hit me. I was like, why the hell am I sending this guy all this free business? These people are learning about this from me. I should be the one setting it up. I'm the one helping them. So it really just comes down to helping people. You don't make a lot of money per policy. Full transparency to everyone on here. The average that I make per policy is about $1,400. Not a lot of money. However, as of today, I have set up, since March of last year, 924 policies. So it's not a lot of money per policy, but when you help a lot of people, it ends up being a lot of money. So there's not really anything else besides you just getting a policy, Ingrid, and sharing it, telling people about it, helping other people, and then you can get licensed. The more people you help, the more money you make. It's that easy. Would you get a higher rate of return investing into an index? So Dill, maybe, but a policy is not about the rate of return. It's about having control of your money and being able to move it while your rate of return never gets interrupted. You can't do that with an index. If you take money from an index, you no longer make your rate of return. So infinite banking is not about a rate of return. Let's say you make 6%. Let's just say that's what it is, 5% even. If you make 5%, but then you use the money to go make more, and you still make 5% because you're not interrupting the growth, that's the power of it. You're in control of money without giving up the money's ability to compound and grow tax free. In an index fund, there's taxes. So to make 5% in an index fund, you'd have to make around 8 to 9% because that would be before taxes. So could you do that? Yeah, maybe. But the problem is that's based off averages, not actual returns. You see, if you lose 50%, you have to earn 100% just to get back where you were at. So could you make more on an average? Possibly, but that's not actual, and you don't have control of the money. So that's the difference. It's not about the rate of return. It's about having control of the money. One America or Lafayette Life, which is better? They're both great. I write a ton with both companies. I think One America is probably a little better for long-term growth, and Lafayette Life is a little better for instant liquidity. So it just depends on what you're looking for. Are you able to set up whole life as an increasing death benefit? Yes. The way we set up policies is as your cash value grows, so does the death benefit. So yes, your death benefit goes up right along with your cash value. I don't want to make payments and let it compound. Would I better end up costing more than what I'd be getting in dividends? G. Walia, I have no idea what you're saying, man. It doesn't make any grammatical sense. I have zero clue what you're saying. So yeah, maybe rewrite that. I had no clue what you're saying. Also, have you heard of Douglas Andrew? Yes, I have. IUL, he pushes them like crazy. I think I don't like IULs at all. I don't think they're good at all for infinite banking. I don't think they should ever be used for infinite banking. Let's see. What's the average return of whole life? So I've touched on that several times, guys. The guaranteed compounding rate is 3.25 plus dividends. Dividends aren't guaranteed, but they've been paid out every year for the last 100 plus years. What specific license or licenses do you have? Do they allow you to offer products to anyone in the US? So Simon, I have my life license. That's the only license I need to set up life insurance policies. I don't do anything else. I don't deal with securities and all that stuff. I just invest in real estate and I help people with infinite banking. Ingrid, the truck scenario made sense. Love it. All right, cool. Glad that made sense. My calls with Carson Herleen. Anything I should come prepared with to make the best of the call? Michelle, so Carson's great. Carson will take great care of you. I would really just come with questions, things that kind of don't make sense to you on how infinite banking works. And that way you can make the most out of that call. Anthony, completely new to this, but is there a limit on how many policies you can hold? Yes and no. You have to be healthy enough. So it is life insurance. You can't be on your deathbed. And your income and net worth has to justify the amount you're getting. So there might be a time where the insurance company doesn't approve you for any more insurance. And then what you do is you just get policies on other people. I've got 3 policies on my daughter's life. I'm the owner, but she's the insured person. So if you just keep making more money, if you keep getting more wealthy, that's when you want to start more policies if you have more money. So as you keep getting wealthier and as you keep making more money, you'll keep getting approved for more policies, hypothetically. Let's see. Any recommendations for someone that wants to get in the business, or do you offer mentorship? So Hector, I don't offer any mentorship. I just don't have the time at this point. I don't even know if I'd want to do mentorship, because quite frankly, guys, for it to be worth my while, and don't take this the wrong way, I'd have to charge a lot of money. If I calculate like what I make per hour, I'd have to charge people a lot of money. And it's just, I don't know if I'd want to do it. Like, for one, most people probably wouldn't even want to pay it. But at the end of the day, I value my time more than anything. If I spend an hour on the phone with somebody, that's an hour I'll never get back, ever. Right now, I've got 10 more minutes before I have to jump on a phone call. So I had this gap where I'm thinking, all right, let me pour into you guys. But you have to understand that for me to do a mentorship, I'd have to charge a lot of money. And yeah, I don't do it at this point. If you want to get into the business, what I would do is I would start by getting a policy. Get a policy, see how it works, and then just start sharing it with other people. That's all I did. I got a policy, I started using it, I saw the power of it, and I just started sharing with other people, researching, reading books, becoming an expert at infinite banking, and then being able to explain it to other people. As I was able to do that, I started writing a lot of policies. So that's what I would recommend, is just get a policy, use it, study it, read books, watch YouTube videos, and learn. And that way you can help people set them up. I want to thank you for sharing. I learned infinite banking from one of your videos, and now I'm using Ascendant Financial to get a policy. Nice. Yeah, so I know the owner of Ascendant Financial, Jason Lowe, out in Canada. So I'm glad he's taking care of you. When you borrow, you're also paying interest along with growth you're getting. Yeah, you are. You don't have to, though. That's, again, the thing I need you guys to understand. You are in total control of a policy. If you borrow money from a policy, you never have to repay the policy loan. You could literally never pay it. And what's going to happen is one day you're going to die. It's going to happen to all of us. The insurance company knows that. They know that if you don't pay the policy loan back, they can just deduct it from your death benefit. So you never have to pay back the policy loan. You never have to pay the interest. You should, but you never have to. So hopefully that answers your question there, G. So G, you're confused on how you make money twice. It's very simple. If your policy is growing at 6% with the compound interest, the guaranteed plus the dividends, and you're borrowing at 5%, you're making a 1% spread on borrowing this money. If you take it and go make 10% by lending it to someone, you're making 10% over here, and you're making your 1% spread over here. As you pay back the policy loan, the amount of interest you pay on that loan goes down because your balance goes down. So the spread goes up. The more you pay down the policy loan, the more money you make in the policy while you're using the money outside of the policy. Does that make sense? So that's how you're making money twice. So hopefully that made sense. Saw you finally ran into Chris Kirkpatrick. He and his wife spent some time at my place in Costa Rica. After you and I spoke, I mentioned to him in passing that he should look you up. Yeah, Chris is like instantly like one of my great friends now. Such a good dude. We met each other out in Indiana. We were at One America's symposium, and we just clicked. Just a cool dude. He actually lives out here in Phoenix, in Chandler, so pretty far, but I actually just saw him last week. Super cool guy. So I'll actually let him know that that you're one of my clients. That's cool. Frank Meza, I found you on TikTok, bro. I got my first IBC in January with you guys. I'm speaking to Joe for a second policy. You changed my view on money. Thank you. Frank, thank you, man. Seeing stuff like that, honestly, guys, like if you can, I don't think you can see this. I literally have goosebumps. Like making money is great. Like I've gotten to a point, guys, where I make a lot of money. Relatively speaking, from where I was at before, like in the grand scheme of things, I don't make anything. But relatively speaking, I've gotten to a place where I make a lot of money. That's great. It's cool to have like be able to buy stuff and not have to worry about it. But what really like I love is stuff like that. That is emotional income. Like I've never made an amount of money and got goosebumps from it. Hearing that I changed your view on money and literally changed where you're going to go from here on out, that gives me goosebumps. That's emotional income. It's worth more than the actual money, in my opinion. Like, think about this, guys. We all die at some point. We all pass away. We don't know when it's going to be. It could be tomorrow. It could be 80 years from now. When we pass away, nobody is going to remember how much money we made. They're not going to remember the cars we had, the boats, the planes, the Gucci, the Louis Vuitton. Nobody's going to remember that. What they are going to remember is how you made them feel and what you did for them. Remember that. Like, I've learned that the more people I can help, the more people I can touch, the more people I can inspire, that's my legacy. When I pass away, I want so many people being like, not mourning, because I don't want people to think of that. I want them to celebrate my life, celebrate what I did for them. So, Frank, you thanked me, but man, I thank you. Thank you for that comment. I really, really appreciate it. Seriously. Frank said, "What's a lot? LOL. Maybe I'll pay." So, guys, I've been tossing this around. I was talking about mentorships a while ago. And that's what Frank's asking about. Is I've thought about a dollar amount, and my thought is for a year, $10,000. Honestly, that is a discount. That is a good deal for my time. Where's my calculator? So my thought is to give bi-weekly phone calls. So an hour-long call every 2 weeks. That'd be 26 hours of my time. So $10,000 divided by 26, that's $384 an hour. Guys, I make a lot more than $384 an hour. I can tell you that right now. So I've thought about it, and I think if I gave mentoring for 1 year, bi-weekly calls, $10,000, it's fair, I think. So at the same time, I just don't know. I don't know if I want to have like one-on-one mentoring with people, but I don't know. You guys tell me if you think that would make sense. $10,000 to work with me for a year. I know for a fact if I can work with someone one-on-one for a year with infinite banking, they will 100% do better than not having me help them. Guaranteed. Yeah. So that's what it is, Frank. I'm thinking 10 grand for a year, bi-weekly calls, hour long, ends up being $384 an hour. Discount for you guys. I've been binge watching, there we go, Chris Nagel's content, plus reading Become Your Own Banker and others. This is the unlock I was looking for. Michelle, that's amazing. Can't wait for you to get on board and start using it. That's exactly how I was 2.5 years ago when I learned this. I learned this during the COVID shutdown, March of 2020. I was obsessed with infinite banking. I would read anything and everything I can get my hands on at all times of the day and night. So keep doing that, because the more you know about it, the easier it becomes when you start your policy. And when you start your policy and you know what to do, you will crush it. Are you recording this to put on YouTube to review later? Paper frosting. Yes, this should be recorded and be on my channel. Kevin Kelly, Devin, don't start crying on me. Plus, that didn't look like goosebumps. It looks like monkeypox. Okay. Let's see. Hector says 10K ain't bad at all. I got 10K burning a hole in my pocket right now. So here was my thought, guys, is let's say you start a policy, and let's just throw out a number. Let's say you put in $20,000 into a policy. My thought was, first, take that $10,000, pay me as your mentor. So now you've got the full amount compounding and growing tax-free. Now you take the 10 grand to start working with me. I would show you how to structure it to where that 10 grand gets lent to a business that you own. If you don't own a business, I've got teams that can help you set up LLCs and set up tax structuring and all that stuff. but you lend that 10 grand to the business. Now the business pays you back interest only. So you're basically creating a note from you to your business. I do this all the time. That comes off your taxable income. The money for that note goes back into your policy, building up your cash value. And then I would just show you how to take the rest of it and start paying off debt. Take it and start investing in your business. Take it and buy a car, whatever you wanted to do. That was my thought, is like, if I'm going to show you, if I'm going to mentor you and it's 10 grand, use a policy for it. Because if you just gave me 10,000 bucks out of your checking account, it's with me now. It can no longer compound and grow for you. But if you first put it in a policy, then use it, now it's compounding and growing for you tax-free. You created a note, so you have taxable income that's taken off of your books every single month. And then you've got my mentorship to show you how to really start cranking. So yeah. Let's see. Dude, seriously, I'm ready to sign up. If you're serious about the mentorship, gonna hit you up for real. You've been warned. I love it. Did you do any private lending in 2021? If so, did you receive a 1099? Great question. So Jimmy, I did not do any lending in 2021. I started lending this year because I'm being very, very careful with real estate deals I get into right now. I just feel like the market's in a wonky place, and I don't want to get into a deal unless it's got a ton of spread. And if the market crashes, then I'm good still. And those deals are just very hard to find right now. So what I'm doing is I'm taking money from my policy and lending it on deals where I'm in first lien position. So I'm getting interest payments back to me. So I just started doing that through Private Money Club. If you guys want to get into Private Money Club, I would highly recommend it. It's where I've gotten all of my private money from when I do deals, and it's where I actually lend money now to make money on deals. So I'm going to put it here in the chat. That's the link, guys. So if you want to get into Private Money Club, I would highly, highly recommend it. It's basically a dating site for money. So people that have real estate deals that need to be funded will put them on the app, and then people that have money that want to make a return they search for deals. So if you have, let's say, 100 grand that you want to implement and you want to get working for you, you can search through deals, and if you find one that you think is a good deal, the app pairs you together with that investor, and now you guys work together for you to fund that deal. Or if you're a real estate investor, you now have private money lenders lending on your deals. So I would definitely check out Private Money Club, guys. However, I got to jump off here. I appreciate all you guys. I have a call that I'm actually late for. So thank you for everyone that joined. I appreciate you guys. And if you guys are interested in my mentor program, again, I'm thinking it's going to be $99.97. It just sounds cooler than 10 grand. It'll be a year's worth of my time, biweekly phone calls, an hour long for a year. So hit me up on direct messages on Instagram if you guys would like to take advantage of that. Otherwise, thank you guys so much. Appreciate you guys. Peace.